Hello and welcome to this week's crypto update. So what's been happening in crypto this week and what does it mean for your altcoin bags? Well, first and foremost, we can see that there is a huge uptake on the supply of Bitcoin and others. So let's have a look. Institutions now, the likes of Strategy and many others out there, now hold over 10% of all Bitcoin supply as demand outpaces Bitcoin mining by 10x. Public corporate Bitcoin treasury firms and ETFs now hold 10% of Bitcoin, fueling unprecedented market dynamics. What does this actually mean? Well, first and foremost, there's 10% of all Bitcoin that has ever been created or will be created is now has been bought by institutions, and the vast majority of them are taking the long-term view. So the chances are that 10% won't come back onto the market anytime soon. So it's a reduction in overall potential supply in the marketplace. But not just that. The real part here is that for every Bitcoin being produced right now, there's 10 being bought. So what's being produced is only fulfilling 10% of that demand, and the other 9 are coming, being bought from others, people selling their tokens. So in other words, people who are, because the prices have gone up, are happy to take some profit. Maybe they're selling some or all of their Bitcoin at this stage, locking in that profit, possibly rotating that into others. But the bottom line is most of it is now moving to institutional investors who are taking the long-term view. So not only is 10% of it already locked up, it's likely that that's going to grow to a bigger number. And there's that huge demand, which of course will ultimately, you would believe, drive the value of the price up even further over time. Because if 10 times more is being bought than created, then that's all coming off existing sellers and off exchanges. And we've seen that on every few weeks we do update on Bitcoin held, and it's just continuing to grow and grow into long-term holders. Is something similar happening in altcoins? Well, we can look at Ethereum as an example, and we can see that there's a supply crunch happening here too. When you check in Ethereum available for sale on exchanges, you can see just 16.14 million Ethereum now sit on exchanges. That's a tiny 13.34% of all total supply, and is one of the lowest points we've ever hit with the percentage of Ethereum on exchanges. And in the past 90 days alone, 1.61 million Ethereum worth 5.74 billion has been pulled off exchanges. So it's coming off exchanges at a rapid rate. And again, when the Ethereum or any other altcoin is on exchanges, it's more often and quite likely there because they're planning to sell it at some point in the future. The less and less of it that is there, the less potential for big sales, but also at the same time, people buying it again, many are long-term holders. So this, generally tends to mean exchanges are back at 2016 levels and Ethereum is disappearing, demand's heating up. You know what tends to happen from there, and we've seen that Ethereum has nearly doubled in price now from where it was in the April lows, and the expectation is it's going to move towards all-time highs and price discovery after that. What has been happening? Well, we look at the S&P 500 and notched up a fresh all-time high yesterday after climbing 0.78%. The rally was sparked by trade deals announcements between the US and Japan, Indonesia and the Philippines, plus news of positive progress towards the EU deal. So again, as this sort of macro part of the equation plays out, and the more that becomes positive, again, I suppose it's positive news, but also it's reducing the potential for negative news on the 9th of August when all these deals are going to be, and supposedly will be finalized. Sorry, the 1st of August, which of course is fast approaching. So, it's seen as positive news. The S&P has reacted. Bitcoin and so on, not so much just yet, but it's holding steady. And it will be very interesting to see what happens over the next week as we go to that deadline and see the outcomes of it and what might happen. But I would expect we'll see volatility over the coming week. What else have we got out there? Well, we've got a snippet of information here. The US dollar has lost 30% of its purchasing power in just the last 5 years. I mean, this is incredible, really. If you consider that something you could have bought for $1 before, now you need 130 to buy it, or if you're buying something for 100,000 before, now you need 130,000 just to buy the same thing, and that's just in the space of 5 years. Or if you look at it another way, if you had invested $100,000 and now is worth 100,000, 130, you'd be feeling pretty good about yourself. You're up 30,000. But in actual fact, if that happened over a 5-year period, you've actually gained nothing. Because when you take that money out, you could only buy the same thing you would have bought before. And in fact, it gets even worse, because if you had 100,000 and now it's worth 130,000, guess what the taxman looks at? You've just supposedly made a gain of 30,000, and now you have to pay your tax on that. So in actual fact, you've gained 30,000. You must pay some of that to revenue, and if just because of this purchasing power being reduced, you've actually lost money. Even though on paper you've made 30, you're actually down money over that 5-year period. So it's really important people take that into account when they're looking at the real value and real upside value that they gain. And this is one of the reasons many people would say that you should have some of your allocation in the likes of gold and silver, which does hold its purchasing power. And lastly, I suppose a word of caution in the general markets. The S&P 500 price to peak earning ratio has moved up to 26.5, its highest level since 2000, and 54% above the historic mean. Now, usually these things always revert to the mean, and quite often as they revert to the mean, they go beyond. So if you look back to 2000, when it was the last time it was this high, from there for the next 7 to 8 years, it virtually went in a straight line down, which of course wouldn't be good for the overall pricing of assets. And so that's the word of caution in where we're at. In the overall scheme, Bitcoin and cryptocurrencies and the altcoin season it's certainly showing signs of strength. There is the potential that we can see altcoin season coming towards the end of this year. But again, have that word of caution, have that understanding that at any time this can move. And so if you're in profit, take your profits. But certainly now would appear to be a good time that if you're not already allocated, find the ones you like the best and go from them. But I would say, if we look at the Bitcoin chart briefly, here we can see, we're in this triangle. It just broke below that this morning. You can see it here now. It's retesting that line. If it doesn't get back above that line and fails to get above the line, now it becomes resistance, and it's quite likely it'll drop significantly further. Where to, I would suggest within this below the blue line above the white line, the last sort of top of that we've seen, and so it's likely to come between 112 and 110,000. And so if you are looking to get into altcoins, when that happens, when it happens, it could be a good time to allocate into what might be your favorite altcoins. And so that's the general gist. Are we in altcoin season? Well, if you look at the sort of top 10 cryptocurrencies here, you can see Bitcoin in the last 24 hours is down 2%, last 7 days 2.4%. Others have followed, and some, the likes of XRP, the likes of Dogecoin, and the likes of Tron have dropped on their weekly numbers. But then others have held strong, the likes of BNB, Ethereum, and others. So is it an full-on altcoin season? Don't think so. Is it showing signs that we're moving in that direction? Absolutely. Hopefully you all found that useful. We'll talk to you all next week.